Hey, good afternoon, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, November 5th, and just a couple economic news releases today. And we'll start off with the CoreLogic Home Price Index for the month of September. So we'll kind of see how home prices are doing. So back in August, we had 11.6% growth. So what that means is year over year from August of 2012 to 2013, home prices went up on average in the 20 largest markets by 11.6%. So for the month of September, it went up 12%. So home prices are still showing some improvement in the avenues of going upward. So we all like to see home prices go up. And last but not least, we got the ISM non-manufacturing. This is the also known as ISM services, which is on the servicing sector. So let's take a look here. What we had up there. So anything above 50 is considered expansion. We had a 54.4% growth in September, and the forecast for October is actually supposed to taper down a little bit, primarily because of the obviously the Fed shutdown, and it actually jumped upwards. So good numbers. The manufacturing and services showed some improvement in the month of October, which we were kind of expecting maybe a pullback due to the federal government shutdown. So good numbers right there. Later this week, we do got some volatility coming up. Obviously, we got the GDP for the third quarter. This is the first report coming out for the third quarter, coming out on Thursday. We also have another biggie would be the jobs numbers coming out on Friday. And on the international level, the EC will be meeting, and we'll be hearing a little bit more about where their policies will be going on the European side. So let's go ahead and take a look at the market. And currently, the market's up right now. I mean, a little mixed right now. It's been having some pretty big swings here and there, and a lot of it is, especially the ISM services, showing some improvement there. CoreLogic is showing some good stuff. We got some stocks going there, but earlier in the day, we also had EC, the European Community Commission, had made a revision to their 2000 forecast, actually economic forecast, to even worsen. So they're not seeing too much optimistic for 2014. So basically, what they did was they figured the GDP would be around one. The forecast was at 1.2. They think it's going to decline about 1.1, and they think the unemployment actually go upwards versus coming down. So they think European is hasn't seen the hasn't come, don't show any improvements for 2014. So obviously, investors are kind of reeling in with that information and kind of looking at what they're scratching their heads as to what to do here. So let's go ahead and take a look, see how this is affecting the bond market, and it's obviously having a negative effect here. Now, what I did here is on this chart, I drew a line here. As you can see, we had a couple gaps as we climbed up the last time upwards, and the last gap obviously was closed over the other day here, or this week. It's been closed. But we do got another gap. If we can hold this 101.70ish range, we could potentially, and we may keep in this range here, the 101.70ish range, primarily because we do got some volatility. If we get good numbers coming in, then obviously we could drop further down. But we may hold in this range for a short period, or at least this week. But if the numbers come in negative, where the job numbers don't look too good, the GDP don't look good, we could potentially have an improvement in this avenue. The next line would be down to, we could be looking at the 100.8 range, get pretty range there. So as you can see, we've been kind of trading previously from 100.8 all the way up to the 101.70ish range. Actually, it's even a little bit less than that. If you look closer to a 101.50ish, we were kind of there and kind of back and forth. But we do have that gap there that could potentially close as a result as well. So to kind of mind that a little bit. So rates are down, our rates are upwards today. It's worsened by almost half a point as a result. And again, hopefully we'll hold this 101.70ish range, and then hopefully be able to show a little bit more improvement, and then wait for the news later in this week. All right, folks, thanks for watching. Hope you guys have a great day, and we'll catch you guys tomorrow.